Welcome to Topical Economics. If you're new here, don't forget to subscribe and hit the bell icon so you never miss any of our insightful videos on key economic concepts. In today's video, we're diving into the topic of the macroeconomic aims of the government. I will be walking you through some past paper multiple-choice questions, carefully analyzing each one to explain why the correct answer is what it is. Whether you're preparing for exams or just want to strengthen your understanding of economics, this video will help you get to grip with important concepts in a clear and practical way. So, let's get started. Starting with question 1. A government retrains unemployed industrial workers to increase employment opportunities. The policy may have adverse effects on other government macroeconomic aims. What illustrates this situation? A. Better skilled workers may increase productivity and improve economic growth. B. Increased wage earning capacity may lead to demand pull inflation. C. More employed workers may reduce government expenditure on benefit payments. D. Near full employment may result in a more stable balance of payments. The correct answer for this question is option B. Increased wage earning capacity may lead to demand pull inflation. When the government retrains unemployed industrial workers, the intention is to increase their employability, leading to higher wage earning capacity. As these workers find employment and start earning wages, they may increase their demand for goods and services. If this increase in demand outstrips the economy's ability to produce goods and services, it can lead to demand pull inflation, where the demand for goods exceeds supply, driving up prices. Analyzing the other options. Option A. Better skilled workers may increase productivity and improve economic growth. While retraining may indeed improve productivity in the long run, this is more of a potential positive outcome rather than an adverse effect in the short term, which the question is concerned with. Next, option C. More employed workers may reduce government expenditure on benefit payments. Is a positive outcome of retraining, as reducing unemployment would cut government spending on benefits. However, it doesn't directly address the possible adverse effects on other macroeconomic aims. Lastly, option D. Near full employment may result in a more stable balance of payments. Is not necessarily true in the short term. Near full employment can lead to higher domestic consumption and potentially more imports, which could worsen the balance of payments, especially if the economy becomes more dependent on imported goods. Moving to question 2. What is not usually a macroeconomic aim? A. Balance of payment stability. B. High government borrowing. C. Lowering cyclical unemployment. D. Reducing absolute poverty. The correct answer for this question is option B. High government borrowing. Is typically not considered a macroeconomic aim. While governments may borrow to finance deficits or fund specific projects, high levels of borrowing can lead to negative consequences such as rising national debt, higher interest payments, and potential instability in the economy. Macroeconomic aims typically focus on goals like economic growth, full employment, price stability, and the balance of payments. The other options, balance of payment stability, lowering cyclical unemployment, and reducing absolute poverty, are more closely related to macroeconomic objectives. Option A, balance of payment stability aims to ensure that a country does not face excessive deficits or surpluses in its international transactions. Next, option C, lowering cyclical unemployment, focuses on reducing unemployment caused by economic downturns. Lastly, option D, reducing absolute poverty, is often a goal of economic policies, aiming for an improvement in the standard of living for the most disadvantaged groups in society. Moving to question 3. What is not likely to be a conflict between government macroeconomic aims? A. Economic growth and balance of payment stability. B. Full employment and low inflation. C. Redistribution of income and full employment. D. Stable prices and low unemployment. The correct answer for this question is option A. Economic growth and balance of payments stability are generally seen as complementary in many cases. A growing economy tends to boost export demand and attract investment, which can improve a country's balance of payments, the difference between its imports and exports, as well as financial flows. While growth may lead to higher imports in the short term, it can also create the conditions for improved export performance and increased capital inflows in the long term. On the other hand, the other options typically involve more direct trade-offs between policy goals. Option B, full employment and low inflation. Achieving full employment can lead to wage pressure, which may increase inflation, creating a potential trade-off between the two aims. Next, Option C, redistribution of income and full employment. Policies that focus on redistributing income, such as higher taxes on the wealthy or increased welfare spending, might have an impact on incentives to work, potentially affecting employment. Lastly, Option D, stable prices and low unemployment. The Phillips curve suggests there is often an inverse relationship between unemployment and inflation. Keeping unemployment very low can push up inflation, creating a conflict between stable prices and full employment. Moving to question 4. What is a macroeconomic aim of a government? A. Balance of payment stability. B. Deflation. C. Income inequality. D. Unemployment. The correct answer for this question is option A, balance of payment stability. Governments often have several macroeconomic aims to ensure the overall health and stability of the economy. These aims include balance of payment stability. This refers to maintaining a healthy balance between a country's exports and imports, which is essential for economic stability and avoiding excessive debt or currency crises. Analyzing the other options. Option B, deflation. A decrease in the general price level is typically not an aim of governments because it can signal an economic slowdown or recession. Next, Option C, income inequality. While reducing income inequality is a social goal, it's not a specific macroeconomic aim in the strict sense. However, policies addressing income inequality can be part of broader macroeconomic strategies. Lastly, Option D, unemployment. Reducing unemployment is an important goal, but it's often considered a part of broader economic policies, particularly under full employment goals rather than a primary macroeconomic aim. Governments usually seek to achieve low unemployment, but it doesn't necessarily define the main macroeconomic objective on its own. Moving to question 5. Why might measures to reduce unemployment also make inflation rise? A. They encourage cheap imports. B. They increase demand. C. They reduce firms' costs. D. They require wages to fall. The correct answer for this question is option B. They increase demand. When measures are taken to reduce unemployment, such as increasing government spending, lowering interest rates, or other stimulus actions, they typically aim to boost overall economic activity. These actions can lead to higher consumer demand for goods and services. If demand rises too quickly in an economy that is already close to full capacity, businesses might struggle to keep up with this increased demand, leading to price increases, inflation. This is especially true if the labor market is tightening, fewer unemployed workers, which could push wages higher as firms compete for workers. Higher wages can increase costs for businesses, which may then pass those costs on to consumers in the form of higher prices. So, the relationship between reducing unemployment and rising inflation is typically driven by increased demand outstripping supply, causing upward pressure on prices. Moving to question 6. What are two aims that a government normally pursues when managing the performance of the whole economy? A. To encourage an increase in production and to prevent high inflation. B. To ensure no one is unemployed and to reduce exports. C. To give everyone equal incomes and to increase government revenue. D. To protect the environment and to reduce interest rates. The correct answer for this question is option A. The two aims that a government typically pursues when managing the performance of the whole economy are to encourage an increase in production and to prevent high inflation. Governments generally aim to boost economic growth by encouraging higher production, output, and improving productivity, while also managing inflation to ensure price stability and avoid the negative impacts of excessively high inflation on the economy and consumers. Moving to question 7. The government redistributes income more evenly. What is most likely to increase? A. The incentive to work. B. The level of savings. C. The need for welfare payments. D. The rate of inflation. The correct answer for this question is option C. The need for welfare payments. When the government redistributes income more evenly, it typically involves policies like progressive taxation or direct transfers to lower-income households. These measures are often aimed at reducing income inequality and providing financial support to those in need. As a result, the redistribution is intended to reduce the need for additional welfare payments. However, this redistribution may reflect existing welfare needs or reduce the gap between rich and poor, potentially reducing the overall reliance on welfare. Analyzing the other options. Option A. The incentive to work. If income is redistributed, particularly through welfare or transfer programs, it could potentially reduce the incentive for some individuals to work, especially if benefits are relatively generous, and reduce the need for additional earnings. This could decrease the incentive to work, rather than increase it. Next, option B. The level of savings. Redistributing income more evenly could reduce savings for wealthier individuals who are taxed more, while increasing savings for poorer individuals who may now have more disposable income. However, there isn't a clear-cut link to savings overall, making this a less likely outcome. Lastly, option D. The rate of inflation. Income redistribution typically doesn't directly impact inflation. Inflation is more influenced by factors like monetary policy, aggregate demand, and supply-side issues, rather than income redistribution alone. Moving to question 8. A government lowers interest rates to encourage more borrowing and spending by households to increase economic growth. Why could this lead to a conflict with other government aims? A. It could cause uncertainty and lead to lower demand. B. It could encourage more savings and lead to higher unemployment. C. It could lead to lower prices of consumer goods and result in deflation. D. It could stimulate consumer demand and lead to inflation. The correct answer for this question is option D. It could stimulate consumer demand and lead to inflation. When a government lowers interest rates, the primary goal is usually to encourage borrowing and spending. Lower interest rates make loans cheaper, so households and businesses are more likely to borrow money to spend on goods, services, or investments. This increased spending can stimulate economic growth. However, one potential side effect of increased spending is that it can lead to demand pull inflation, where the demand for goods and services outstrips supply, causing prices to rise. If consumer demand grows rapidly and businesses cannot keep up with the demand, due to factors like production limitations or resource constraints, this can cause inflation. This could conflict with other government aims, such as controlling inflation or maintaining price stability. If inflation rises too quickly, it can erode purchasing power, harm savers, and create economic instability, which may be undesirable from a policy standpoint. Moving to question 9. In which case is success for the government in achieving the first aim likely to cause problems in achieving the second? The correct answer is option A. A trade-off between full employment and price stability is the most likely scenario where success in achieving one goal, full employment, could create challenges in achieving the second, price stability. Moving to question 10. What is an aim of government policy? A. Income tax. B. Interest rates. C. Stable prices. D. Unemployment. The correct answer for this question is option C. The aim of government policy is generally to promote economic stability and welfare. Government policy often seeks to achieve stable prices, low inflation, which is a key objective of monetary and fiscal policy. While income tax, A, interest rates, B, and unemployment, D, are also important economic factors influenced by government policy, they are tools or outcomes that relate to broader goals like price stability, economic growth, and full employment. Moving to question 11. In trying to achieve one of its aims, a government may make it difficult to achieve another aim. What is an example of this conflict? A. Achieving a more even distribution of income may prevent a rise in the average standard of living. B. Achieving an increase in economic growth may prevent full employment. C. Achieving full employment may prevent stable prices. D. Achieving stable prices may prevent a current account surplus on the balance of payments. The correct answer for this question is option C. Achieving full employment may prevent stable prices. Full employment refers to a situation where everyone who wants a job has one. While this is generally a positive goal, it can sometimes lead to inflationary pressures. When the labor market is tight, employers may raise wages to attract workers, and these higher wages can result in higher production costs, which businesses may pass on to consumers in the form of higher prices. This could lead to inflation, making it harder to maintain price stability. Analyzing the other options. Option A, achieving a more even distribution of income may prevent a rise in the average standard of living. Is not necessarily true. It's possible to have more income equality while also seeing improvements in the overall standard of living. Next, option B, achieving an increase in economic growth may prevent full employment. Is unlikely to be a conflict. In fact, economic growth usually helps create jobs and can increase employment, though other factors like structural changes in the economy could complicate this. Lastly, option D, achieving stable prices may prevent a current account surplus on the balance of payments. While price stability might influence trade balances, this is a less direct and less common conflict compared to the trade-off between full employment and inflation. A current account surplus typically depends on factors like exchange rates, export demand, and relative price competitiveness, not just internal price stability. Moving to question 12. Which statement about the meaning of government economic aims is correct? A. Economic growth means that a country's real output must rise over time. B. Full employment means that no one must be unemployed. C. Price stability means that the price of all goods and services must remain unchanged. D. Redistribution of income means that everyone must have equal incomes. The correct answer for this question is option A. This is because economic growth refers to the increase in the production of goods and services in an economy over time, often measured by the rise in real GDP, gross domestic product, adjusted for inflation. Moving to question 13. A government decided to increase its spending on building schools and hospitals. Which aim of government policy is most likely to be achieved by this increase? A. A balance of payments surplus. B. A stronger exchange rate. C. Economic growth. D. Price stability. The correct answer for this question is option C. Economic growth. Increasing government spending on building schools and hospitals typically contributes to economic growth by stimulating demand in the economy, creating jobs, and improving infrastructure, which can have long-term benefits for the productivity of the workforce. Analyzing the other options. Option A. A balance of payments surplus refers to the situation where a country's exports exceed its imports, leading to an inflow of foreign currency. Increasing domestic spending on schools and hospitals is unlikely to directly affect the balance of payments. Next, option B. A stronger exchange rate. While government spending can have an indirect effect on exchange rates, it doesn't directly lead to a stronger exchange rate. The exchange rate is primarily influenced by factors like interest rates, inflation rates, and trade balances. Lastly, option D. Price stability. Increased government spending could potentially lead to inflation if the economy is already near full capacity. Therefore, it might not help achieve price stability, and could even risk pushing up prices. In contrast, government investment in schools and hospitals helps to enhance human capital and improve long-term economic productivity, aligning with the goal of fostering economic growth. Moving to question 14. A government increases expenditure on infrastructure to stimulate an economy. With which of the other government aims for an economy might this conflict? A. A decrease in income inequality. B. A higher rate of economic growth. C. A lower level of unemployment. D. A steady price level. The correct answer for this question is option D. A steady price level. Increasing government expenditure, especially if it is significant or not matched by a corresponding increase in supply, could lead to inflationary pressure. If the economy is near full capacity, the increased demand from government spending could push up prices, causing a conflict with the aim of maintaining a steady price level. This would likely conflict with the aim of keeping prices stable. Moving to question 15. A government achieves a high rate of economic growth. What may result from this that might cause a conflict with other government aims? A. It may increase government income. B. It may increase incomes for the lower paid. C. It may increase the supply of exports. D. It may increase the volume of imports. The correct answer for this question is option D. It may increase the volume of imports. Economic growth typically leads to increased consumer demand for goods and services. This can drive up imports as consumers and businesses buy more foreign-made products to meet their needs. While imports may benefit consumers, they can create challenges for a government trying to maintain a trade balance or protect domestic industries. A rising volume of imports could lead to a trade deficit, which might conflict with other government aims such as improving domestic production, reducing unemployment, or achieving a favorable balance of payments. Thank you for watching this video. I hope the explanations of past paper questions and the reasoning behind the correct answers helped clarify some key concepts. If you found this video useful, please don't forget to like, comment, and subscribe.